In 2012, Facebook was already a global powerhouse. Over 1 billion users logged in daily, advertisers lined up, and Mark Zuckerberg had a clear vision: connect the world. But even as the social network dominated online interaction, Zuckerberg was already thinking about the next frontier. The concept of a fully immersive digital universe had captivated him for years. Virtual reality had failed before, with clunky headsets and limited adoption. But Zuckerberg saw an opportunity to redefine human interaction, commerce, and entertainment, all under one digital roof. In 2021, he announced a bold pivot. Facebook would become Meta. The goal was clear: build the Metaverse, a virtual world that would eventually house millions of people simultaneously. The rebranding was ambitious. Billions were allocated to Reality Labs, Meta's division focused on AR and VR. Zuckerberg promised that the Metaverse would be the next computing platform, just like PCs or smartphones. Investors initially cheered the vision, pushing Meta's stock toward all-time highs. It wasn't just an investment in technology, it was a bet on the future of human interaction. Reality, however, was more complicated. Developing the metaverse meant building not just software, but an entirely new infrastructure. VR hardware, AR devices, AI-driven environments, and virtual commerce systems. Each component had technical hurdles. The Quest VR headset, for example, had to be affordable, lightweight, and capable of high-resolution rendering. Reality Labs' research revealed that latency, motion sickness, and content creation pipelines were far more challenging than expected. By the end of 2021, Meta had spent over $10 billion on Reality Labs alone. Analysts raised eyebrows as operating losses ballooned. The Metaverse project had not generated meaningful revenue, yet it was consuming cash at a rate higher than any previous division in Meta's history. Despite this, Zuckerberg continued to push the vision publicly, showcasing virtual concerts, meetings, and social hubs. The narrative was compelling, but the financials told a different story. Internal reports suggested that Meta employees were growing skeptical. VR adoption rates lagged behind expectations. User engagement on Horizon Worlds, Meta's virtual platform, was lower than projected. Early adopters praised the technology, but mainstream consumers hesitated to buy expensive headsets or spend time in a virtual world with few friends. The metaverse wasn't failing yet, but growth was slower than anticipated. Then came 2022, a pivotal year. Meta's stock began to slide as investor confidence wavered. Regulatory pressure and negative press around privacy concerns compounded the problem. Reality Labs' losses exceeded $13 billion, and the division reported no clear path to profitability. Skeptics in the tech community began questioning whether the metaverse was a dream too big for any company to execute. Despite mounting criticism, Zuckerberg doubled down. He framed the metaverse as a generational project, a decades-long endeavor that would redefine computing. Meta invested in partnerships with fashion brands, sports leagues, and media companies, hoping to create content that would entice users. Billions more were allocated to hardware development, including the Quest Pro and AR smart glasses. The scale of the investment made it clear. Meta had bet everything on a vision that might not pay off for years. By mid-2023, cracks were showing. Meta's user base on traditional platforms plateaued. VR headset sales, though improving, failed to reach mainstream adoption. Internal documents leaked revealing layoffs, product cancellations, and missed deadlines. Analysts began to question whether Reality Labs' ambition had outpaced its execution capabilities. Competitors like Microsoft and Apple observed closely, recognizing the opportunity to enter the space with less aggressive spending and more practical use cases. Yet the story of the metaverse isn't purely one of failure. Even amid setbacks, the technology developed by Meta pushed the industry forward. The Quest headset became a market leader in VR hardware, while AI-driven environments and virtual collaboration tools inspired new startups and rival platforms. Meta's failure to immediately monetize the metaverse highlighted the challenges of building infrastructure without a ready audience, but it also proved that immersive social computing was no longer science fiction. In 2024, a recalibration occurred. Meta reduced spending, prioritized practical applications, and emphasized mixed reality tools for business collaboration rather than pure social immersion. Horizon workrooms became a staple for enterprise users, demonstrating tangible value in productivity rather than novelty. Investors responded positively, and while Meta's stock never regained its 2021 highs, confidence returned slowly. The rise, fall, and rebirth of Meta's virtual empire is a story about ambition, risk, and the limits of even the most well-capitalized company. Meta's gamble shows that visionary projects require not just money, but timing, user adoption, and patience. The metaverse isn't dead. It's evolving, recalibrated for a future that may take decades to fully realize. There are 3 key lessons from Meta's journey. First, visionary leadership must balance ambition with feasibility. Spending billions on a project with uncertain adoption carries enormous risk. Second, technology adoption depends on ecosystem readiness. No matter how advanced the hardware or software, users will only embrace products that fit into their daily lives. Third, failure is rarely final. Meta's metaverse may have stumbled, but the infrastructure, talent, and intellectual property developed during this period will shape the next generation of computing. The story continues. Meta's quest for the metaverse is far from over. Whether it becomes the dominant digital universe or a cautionary tale for tech visionaries remains to be seen. But one thing is clear: few companies have attempted a gamble of this magnitude. Few leaders have dared to dream this boldly. And few stories in modern business illustrate the intersection of vision, risk, and resilience as clearly as Meta's quest for the metaverse. So what do you think? Was Meta's metaverse a necessary risk that will pay off in the long term, or a cautionary tale of overreach? Leave your thoughts in the comments. Your perspective matters. If you want more in-depth case studies of corporate gambles, visionary failures, and billion-dollar bets, subscribe and turn on notifications. In the next episode, we'll explore another company whose audacious ambition reshaped its entire industry.